Hello everyone, myself Vaibhav. A very good morning, the Monday morning, and we are all geared up for starting the week. And as we start the week, we see that the dollar index is actually declining and the stocks are on the rise. For the Asian trading session, the major equity indices are all up. Some are more than 2 percentage point higher, whereas others like the Chinese markets are clocking the gains around 1 percentage point. So you can say that the magnitude differs, but the general direction is on the upside, and also the equity indices futures for the US are also pointing to the open on the higher side, and as the US session will get underway, we will see further moves on the positive direction, as is the case with the European trading session also. So let's get started for the day, and we will see the trajectories for these instruments, and also we will first take a look on the data docket. And earlier in the day, we got the GDP numbers for Japan, and as expected, the growth rate has improved now for the quarter ended September. The growth rate stands at 21.4% in annualized term, and in terms of quarter on quarter, the reading stands at the good number at 5%. This is, of course, a turnaround compared to the prior quarter's reading, where there was a widespread contraction and the GDP was in the free fall. To some extent, because of the restriction being lifted on the economic activity, we are seeing the revival, but it's anyone's calls how the things are likely to shape up, and we will have to be cautious, and we might see the dip in the GDP growth rate for coming quarters. Later, during the Asian trading session, we also got the industrial numbers for the China, and in terms of the industrial production growth, the growth is of around 6.9% for the month of October. So this is higher than the prior month's reading. So you can say that industrial activity in China is continuing at a breakneck pace, and this is a continuation of their solid performance in the second quarter and now in the third quarter too. We are now for almost in the fourth quarter of this year, as this is the data for the October. So the China has been able to contain the pandemic well, and they are reaping the benefits in terms of the increased activity on the industrial front. The retail sales were also showing the growth of 4.3%, and that is in terms of year on year. That means these months October's retail sales were higher by 4.3% compared to the retail sales of October 2019. So that's a phenomenal success, I can only say. The unemployment rate has also slightly lowered to now stand at 5.3%. So all these economic releases coming from China are pointing to the improvement in the economic activity in the China's economy. Later in the day, we are also scheduled to get the manufacturing index data for the United States, and this is the New York Empire State Manufacturing Index data. And here also we are likely to see improvement. Of course, the magnitude of improvement is not going to be that strong, but still the index is likely to rise beyond 13 compared to the prior month's reading of 10.5. So let's see how the manufacturing sector in the US is doing, and we will get the fair bit of idea once we get this data. Now let's shift our attention to the technical aspects of dollar index first, and then we will also consider how things are shaping up for the Nasdaq. Let's start with the dollar index technical outlook. This is the daily time frame chart, and this downward spiral for the dollar index is continuing. And it looked like that when it was rebounding and holding close to the 93, that we might see the break on the higher side, and it might even continue toward this prior swing high, but that wasn't going to be the case. And I think I had done the session, I'm not really sure, but when I had talked about the possibility of break on the higher side, but that didn't really materialize. And now I think if any of you had gone in for that trade, so it might have ended it in the loss, as we are again back to seeing the dollar index slide, and the trajectory is turning bearish again. So it is going to be better for us to change our outlook and shift with the changing times, and look for shorting opportunities instead of sticking with the earlier stance, as things have changed, and a better it will be better for us also. So this is the Fibonacci expansion, and I think this continuation of the bearish trajectory is likely to take the dollar index towards the 100% Fibonacci expansion of its prior decline, and that opens up for the possibility of dollar index even dipping below the 92 levels. Right now it is trading close to 92.5 to 92.6, and we have more than half a percentage point space on the lower side, and if it continues, then I think even uncharted territories will open up for the dollar index decline. So let's see how things are looking at the 4-hourly chart. We have this consolidation phase closer to the first support of this month, and then we saw this failure to sustain itself and rise on the higher side, and as a result of that the sellers came back in, and now pushing the dollar index lower. Even in today's session, in the early hours of the day, we saw the gap down happening, and in the European trading session, it is a continuation of that downward trajectory. Now the only thing we can do is look for opportune time to get involved for the shorting, and I would say that as long as the dollar index is holding well below this first support level, which is now likely to act as the resistance zone, this S1 around 93. It failed to give support in the first decline also, and then we saw this acting as the resistance. So this prior swing high is now there for us to be used as the marker point. So as long as the price is well below it, well below this immediate swing high, I would say that it will be prudent for us to keep looking for the shorting opportunities. And as I said, we can see the decline towards the second support, and also the 100% Fibonacci expansion level is fairly close. So we will see how things act as the dollar index gets closer to that level. So if you want to figure out the optimum entry and exit points, I think we will have to rely on this confluence of 50, 100 and 200 SMAs, which are there converging closer to the 92.9 price zone. And as I said, the immediate stop loss can be just kept above this prior swing high, which is there around 93.20. So in today's session, though we will need to be quite a bit fortunate for the dollar index to rally towards our desired entry point, and then we will also need consolidation to happen before we can think about getting involved. Right now the dollar index is a lot lower, and because of that the opportunities to trade are going to be far and fewer, and we will have to wait here to get the risk reward ratio in our favor. Even now you can go for the short sale trade, but the concern is going to be the extended stop loss, as technically speaking we will have to use this price swing high to act as our stop loss level. Then we will need some buffer also. So as a result of that, stop loss is likely to come above 93.20, and taking almost more than half a percentage point in risk is never a prudent idea in case of the dollar index, as dollar index is a slow moving instrument, and for us to profit while keeping that big stop loss would we would need the move toward 91.5, and that might take a long time. So instead of that, I would prefer to wait some time and see if we find any sort of retracement happening and then do consolidation, as long as the dollar index is holding well below this confluence zone of the three key SMS, I would prefer to go for the shorting, and as I said, the stop loss would be just a little above this prior swing high, whereas the target can be kept closer to the 92, which is also the immediate swing low. And as I said, we have multiple support zones coming into play around that level, so the risk reward ratio will also be in our favor, more than 1:2. Now let's shift our attention to the equity segment. Here we will see the Nasdaq. The Nasdaq has been one of the slow performers in terms of the equity indices upward momentum these days. For last week, we saw that other two key equity indices for the United States, the S&P 500 and the Dow Jones Industrial Average, rallied lot more vigorously, and they are trading closer to their all-time highs. But for Nasdaq, it saw the correction first, and now it is gradually picking up the pace and starting to rise. Of course, its underlying momentum is on the bullish side, and this time around also, after the decline closer to the 11,500, we are seeing sharp reversal, and it has now again come back towards 12,000 level, and 12,000 is the price area which can then be utilized to act as our decisive marker. So let's see what's happening in the lower time frame chart. In the lower time frame chart, we have the Nasdaq caught in between the support, the central pivot point, which is there around 11,400, and then first resistance has also now given way. So we have this consolidation, which is giving hopes of this continuation of the upward trajectory. The Nasdaq has managed to successfully consolidate, and now even the break above this first resistance. So in that sense, I think the probability is on the rise for continuation of the upward momentum in Nasdaq after this sharp decline. And as long as it is holding well above this 11,800 level, I would say that it will be better for us to go for the long trade. Even in couple of sessions back, I had said the same, and if any of you had gone in for that trade around 11,800, I would say that you might be sitting on good amount of profit if you haven't gone in for the profit taking. And even now, current situation demands us to be patient, and we might see further rally on the higher side, and this immediate swing high is there to be scaled further. So we are looking at fresh buying opportunities. The regression curve is also tilting on the upper side. So both these factors, the pivot point series as well as the regression curve, both are in bullish trajectories. And if we were to rely on this confidence zone of 50, 100 and 200 SMAs, all three are also pointing to the continuation of the upward trajectory. So as long as this support area stands and we have immediate support coming into play around 11,800, we have these consolidation lows, and then as I said, we have this confluence zone of these three SMAs, and as long as the price is holding closer to these support levels, we can indeed think about getting involved for the fresh long opportunities, fresh long trades, while keeping the stop loss just little below this immediate swing low, which is there around 11,600. So we can look for buying opportunities anywhere closer to these consolidation lows, and if we are fortunate enough, we might see some correction happening, so that we can get involved in the Nasdaq with lower stop loss, with minimum stop loss, and that is also going to contain our risk. Even now, the things are looking promising, but in the market, you never know. So it will be better for us to plan accordingly to make sure that the stop loss is not too wide. And then on the higher side, as I said, we are looking for the continuation of this rally closer to the prior swing high. So that naturally opens up the risk reward ratio of more than 1:2, and even if we keep our stop losses lower than the prior swing high, even in that scenario, we will have the risk reward ratio in our favor. So I would say that We should wait for more opportune time and see if some sort of correction happens. Then by the US trading hours time, we will have a better idea also, and we can think about going in for the fresh trade on the buy side for the Nasdaq. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. Thank you all for joining in. Subscribe to our channel. Goodbye.